We're joined by Rahul Kanodia, Vice Chairman and CEO of Datamatics, joining us now. The stock is seeing the heat today. It's down by about 6.5%. But in terms of the overall earnings, revenue is up 17%, EBIT was up 22%, margins improved to 11% from that 10.5%, and net profit was down 40%. But there was an adjusted exceptional loss, but adjusted profit was overall up 12%. To discuss as to how the overall quarter has been like and how FY25 has fared, and of course what the future holds for the company, let's get in Rahul and ask him a few questions on this. Rahul, a very good afternoon to you. My first question to you is your sense of how the company has performed. Did it match up to your expectations, and how overall FY25 has fared?
So I think it was a little shy of our expectations. We had talked about roughly a 4% organic growth. We ended up at about a 3% organic growth, and then inorganic of about 8%. We made these acquisitions. The profitability came down a little bit because of a large customer who's chosen to go to their captive. This is the spike. We typically have a spike in Q4. That spike, unfortunately, was much lower this year because the customer chose to do it in the captive. This was rather unexpected, actually. We didn't expect that to happen. And then we, of course, increased our effort on sales and marketing and postponement. So in terms of the bottom line, I think we could have been better off by about 250 to 300 basis points. Otherwise, in terms of revenue, we are, of course, because of the deferment of some of these metro projects, also the revenue is slightly shy. As I said, we talked about 4%, we turned up at about 3% organic. So a little shy of our expectations.
Okay. And in terms of the overall outlook for FY26, do you think that things are expected to improve in FY26? Because there's a lot of things happening, right? You also have the overall consolidation and integration of TNQ Tech, which will strengthen your overall presence in Europe as well. That will have a proper play out in FY26. What's the outlook like? What's the kind of growth that you're penciling in terms of FY26 top line as well as bottom line?
So we're still looking at a conservative growth, about 4 or 5%. The reason is that the tariff wars are still unclear. We have seen several customers slow down or put some projects on hold. We are waiting for those to kick off. So some of those projects some of them were pretty large ones as well. So they are on hold as of now. Hopefully with a few news items that are coming out around some agreement with China, some agreement with Saudi and Qatar. Even India seems to be falling into some sort of agreement. I don't know the details. But if the tariff war battle ends or reduces, then we will see unlocking of those projects that are on hold right now.
Okay. Okay. And how much of a revenue potential will that bring on the table?
Well, so it depends on that. So we're still looking at a 4-5% growth. Let's see how this unfolds. It's hard to predict right now.
Okay, understood. And in terms of the geographical breakup for the company, just was trying to understand because USA right now is 54%, UK is 15%. Just wanted to get a sense as to how tariffs overall might impact you if the bilateral agreement that takes place could slightly overall impact the company as well as Indian tariffs when it comes to IT services.
So in terms of tariffs on IT services, there's no impact. So far, we've not seen anything. I don't expect anything to come either. What's impacting is the customers we deal with. They are getting impacted. And because they are getting impacted, some of the projects are slowing down. And therefore, the velocity of the pipeline generation is a little softer than what we would expect. But I'm hoping that a lot of that dust settles in the next maybe 1 or 2 months. And hopefully, then it should pick up.
Got it. Rahul, I also wanted to understand that when I was seeing your overall revenue by business mix, there has been a slowing down in terms of contribution from overall digital experiences, but digital operations revenue share is going up, and overall digital technologies share has fairly remained stable. Or maybe going down a tad bit. Just wanted to understand the overall mix change that you are penciling in FY26, and then how does that overall impact your margins?
Yeah, so in terms of an organic performance, I expect this year to be better on digital experiences. The reason digital operations is growing is because of the acquisitions that we've made, and therefore in ratio, it is larger. But digital technologies is still growing well. Out of these three, I would expect digital experiences to be the highest growth. Then comes digital technologies, and then comes operations. In terms of organic growth, right now you're seeing a slight variation because of the acquisition that we made.
Okay, understood. And in terms of one observation that I had from your presentation was also that net cash and investments has been lower this particular financial year as compared to the past 3 years. Why is that? And what is the kind of outlook for FY26?
So net cash has gone down partly because we spent on the acquisitions. Also because there was, as we had cash, we had some minor investment income. That investment income went away, obviously, because we spent it on the acquisition. So therefore, you see a slight dip in the cash. This quarter was also a little tighter. Therefore, the net cash inflow you see in this quarter was a little lower than the earlier years. In Q3, particularly, we had a spike. That's because we did a little bit of a buyback of one of our subsidiary companies' shares, and that showed up in cash flows. So therefore, when you compare with Q3 to Q4, you see that difference.
Okay, understood. Even in terms of attrition rate, Rahul, that was around 12 odd percent, if I'm not wrong, in the last quarter, which has gone to almost 16% this quarter. Is that concerning right now for you? Because we're also seeing global firms that are seeing layoffs on a bigger scale. How are you reading that, and what's the outlook like in terms of where attrition stands in FY26?
Yeah, no, I'm not concerned about that. In fact, attrition is dropping right now because exactly as the reason you mentioned that there is layoffs going on globally, and we do see an element of softness. So I don't expect the attrition levels to go any higher.
Okay. And in terms of investment in newer technologies in AIs, you've been, shelling out around 400 to 500 million there. Just wanted to get a sense, is that figure going to be same in FY26 as well, or are you going to take a rigorous approach and invest more in AI technologies?
Now, we'll keep that steady. Right now, the AI investment is critical because if you're not on the AI bandwagon, you'll miss out a huge wave that is happening. Right now, we've seen a lot of pilot projects and a few of them converting into live projects. So that's a good trend that we see, but a lot more pilots. Still, people are testing the waters, but a few of them have converted into live projects.
Okay.
So that momentum will continue.
Okay, understood. And in terms of the TNQ Tech acquisition, just wanted to get a sense there, because you did mention that FY26 will focus on consolidation and integration of TNQ Tech, and plus this will strengthen overall Datamatics presence in Europe as well. What are the kind of synergies that you're expecting in terms of FY26 flows, and do you think that I know that you've given the guidance of 4 to 5% growth, but do you think that it'll be better because this will strengthen your presence in Europe?
Europe is still a little bit in a soft situation economically. We're not seeing any major headwinds, but it's still soft. Although the presence helps, but that's not going to help in terms of the pipeline. The growth will come really from pipeline generation. But larger physical presence in the continent makes a difference to many customers. And that gives you a local presence. And there, of course, Europeans working over there. It's not Indian, so they get that local feel.
Understood. All right, Rahul, well, you've been very candid in giving all those answers. So thank you so much for that. And thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you very much.